Amazon or Nvidia? Which is the better AI stock to buy today for long-term investors? That's the question I'll answer in this video. I'll compare these two AI stocks across several vital categories, including revenue, profit margins, cash flow, valuation, return on invested capital. Also, I've done a discounted cash flow valuation for each of these two. I'll compare their intrinsic values to their market prices and see which one seems more undervalued as part of this decision to make on which one of these two is the better AI stock to buy. So let's take a look. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Let's start with revenue. And looking back a decade, you can see Nvidia's revenue has recently started to explode at a much higher rate than in the last decade, jumping to $113 billion in revenue. Amazon, meanwhile, has steadily increased its revenue at a nice rate over the last decade, growing from a little under $100 billion in revenue in 2015, all the way up to $620 billion in the most recent trailing 12-month period, behind only Walmart in annualized revenues. The next metric I wanted to compare these two on is operating profit margin, and you can see the big difference here with Nvidia and Amazon. Nvidia generates a whopping 62.71% operating profit margin over the trailing 12 months, compared to just 9.77% for Amazon. Nvidia has one of the best operating profit margins of any of the companies that I follow, and it's a testament to how much value the company is able to extract from the products it sells. It's able to sell its products at super premium prices, and that's what generates that big profit margin. And of course, you're not able to do that unless you have a strong competitive advantage, because if you try to charge these high prices without having a competitive advantage, then your customers will just go to your rivals who are selling their products at lower prices. But Nvidia has such an advantage against its rivals for what it's selling that it's able to charge these premium prices. And oh, by the way, they're sold out for much of next year also. That's how strong demand is for Nvidia's products right now. This isn't going to be permanent, and longer term, I suspect that Amazon's competitive advantage will actually be larger than Nvidia's. Nvidia's competitive advantage is likely going to be eroded over the next 5, 10, 15 years. It's going to take a while, and I think competitors are going to chip away at its advantage. Pardon the pun there, chip away at its advantage, targeting certain areas of the AI market. Of course, comprehensively, Nvidia has by far the best product. It dominates right now with over 90% market share. But, competitors like, Amazon themselves, Google is launching chips. Then you've got AMD, Intel, and others launching these chips that they're not going to take a bulk of the market share away from Nvidia, but each one of them is going to take a few percentage points here and there. And over the years, they're going to build in the areas where Nvidia has a stronger share right now, which is in the software side, the libraries, the CUDA libraries. And so that market share will over time erode. Whereas with Amazon, I don't see any rival able to chip away at Amazon's advantage in its categories. I see actually Amazon taking market share in advertising, Amazon taking market share in worldwide retail spending as more consumers shop online instead of shopping in person. So for that reason, I see this advantage for Nvidia narrowing, but I still see Nvidia with an advantage over Amazon in this category for many years to come, perhaps many decades. Similar story with the cash flow from operations to sales, Nvidia with the big advantage over Amazon. And again, same story with the operating profit margin as is with the cash flow from operations. I see this gap narrowing over the next couple of decades, but I still see Nvidia with an advantage over Amazon in this category because of the nature of the products they sell. Amazon with its e-commerce segment being the large majority of its total revenues. Those are low margin businesses that generate low cash flow from operations to sales. compared to Nvidia's high margin, high cash flow from operations to sales type of products it sells. Next, return on invested capital. This measures how good a company is at taking investors' money, investing it into products and services that generate profits. And Nvidia has done a phenomenal job in this, not just recently, but over the last decade. Recently, its advantage has exploded, going up to 107% return on invested capital compared to 18% for Amazon. Again, I suspect Amazon's return on invested capital to improve over time. The company benefits from economies in scale. Its foundation is built on economies in scale, being that the more customers Amazon serves in a proximity, the lower the cost to serve each customer will be. Also, Amazon is expanding in higher margin categories like web services and advertising, which generate better returns on invested capital. All right, and let's look at the valuation comparison. Measuring by a forward price to earnings ratio, Nvidia is actually cheaper than Amazon, trading at a forward PE of 31 compared to Amazon trading at a forward PE of 33.8, which is interesting because in most of the categories we looked at, Nvidia had an advantage over Amazon, and a big advantage in many of the categories. Perhaps the only category Amazon had an advantage in was in the scale, and the total addressable market of Amazon's products and services are much larger than the total addressable market for Nvidia's products and services, which I didn't really get into in this video particularly, but you saw that with the total revenue generated, Amazon over 600 billion, Nvidia just over 100 billion. But what about when I measure on an intrinsic value doing a discounted cash flow? Well, I last did a discounted cash flow valuation for Nvidia on November 11th, and I came to a conclusion, an intrinsic value per share of $314 per share. And I'll link to the video that did this DCF at the end of this one so you can see the full video, which describes all of the steps and all of the inputs. But that would mean that Nvidia's current market price of 138 is significantly undervaluing the company when its current intrinsic share is 314 according to my calculations. I also did a discounted cash flow valuation of Amazon stock, and this one is as of November 29th. It's more recent. And my intrinsic value per share for Amazon came in at $286 a share, and its current market price is $208 per share. So Amazon stock I also found is undervalued, but the undervaluation, I found it to be more significant for Nvidia. All right, back to the forward price to earnings ratio. Everything I've looked at comparing these two, well, I shouldn't say everything. Most things I looked at comparing these two favored Nvidia. And when I'm also looking at Nvidia's shares trading at a lower forward PE multiple and a bigger disparity in terms of my intrinsic value to market price, everything points to my choice, Nvidia, being the better AI stock to buy today when comparing against Amazon for long-term investors. Now, let me remind everyone, I have Amazon stock rated as a buy as well. I think Amazon is a great stock for long-term investors. I just think Nvidia is better than Amazon when comparing the two head-to-head. Of course, this is for informational purposes only. Do your own due diligence before making a decision on which one of these is right for you. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.